I now hand the conference over to Mr. Rishit Parikh. Thank you, and over to you, sir.
Thank you, Aisha. On behalf of Nomura, I would now like to welcome you all to Just Dial's Q4FY21 earnings call. We have with us the founder, CEO and MD, Mr. VSS Mani, and the CFO of the company, Mr. Abhishek Bansal. Without further delay, I would now like to hand over the call to the management. Over to you guys.
Thanks, Rishit. Hi, everyone. Welcome to Just Dial's earnings call for fourth quarter of fiscal 21. Operating revenues stood at 175.7 crores for the quarter, which declined 25.2% year-on-year and grew 3.6% quarter-on-quarter. On a per-day basis, revenue during fourth quarter grew 5.9% sequentially. The YOY drop primarily reflects impact of lower collections, which we have witnessed over past few quarters due to impact of COVID-19. With lockdown easing and impact of COVID-19 abating post the first wave, monetization had been on an improving trajectory in 4Q. 4Q monetization stood at approximately 85% of pre-COVID levels. Due to reasonably healthy year-end collections, deferred revenue stood at 330.3 crores as on 31st March, which was only down 1.7% year-on-year and was up 8.2% quarter-on-quarter. Operating EBITDA, adjusted for non-cash ESOP expenses, stood at 41.5 crores for the quarter, declining 48% year-on-year, primarily due to lower top line. Sequentially, there has been some decline in margins due to approximately 5% quarter-on-quarter increase in employee expenses, which was partly due to increase in variable payouts and partly due to increments. Other expenses were higher by about 4 crores quarter-on-quarter due to 1.5 crore increase in advertising spend and about 2.9 crores of CSR provisions, which got bunched up in fourth quarter. Our margin profile, ideally, it should be looked on an annual basis rather than just a quarter, because certain quarter might have lumpy cost routines. On a full year basis, if you see, we had 29% year-on-year drop in top line. Despite that, adjusted EBITDA margin stood at 28.2% for the full year. Our employee expenses, excluding ESOP expenses, were down about 21% for the year. Other expenses were down 48% year-on-year in fiscal 21. Even excluding advertising spend, the rest of other expenses were also down about 15% year-on-year. So overall, on the cost front, we have been controlled those quite well, even in this exceptionally tough year. Other income for the quarter stood at 15.6 crores, which was impacted due to increase in bond yields during the quarter versus decline in yields which we had been witnessing in preceding quarters and same quarter last year. Consequently, net profit for the quarter stood at 33.6 crores. For the full year, we had 214 crores of PAT versus 272 crores of PAT last year. Cash and investments stood at 1,572 crores as on 31st March 2021, down just 1.2% year-on-year. The 220 crore buyback that we concluded during the year, we were effectively able to fund the entire buyback and taxes related payout of total 273 crores via our operating cash flows and treasury gains. Coming to operating highlights, we had curtailed our advertising spend in fiscal 21. During FY21, we spent only about 3 to 4 crores on advertising versus about 65 crores spent in FY20. In FY21, bulk of traffic came organically. For 4Q, we had 129.1 million quarterly unique visitors, which was almost flattish quarter-on-quarter if you consider the impact of 2 lesser calendar days in 4Q versus 3Q. Our advertising spend resumed from April 21 in order to promote our newly launched B2B platform JD Mart. Our IPL 2021 campaign has resulted in great branding and awareness among businesses about our JD Mart platform. On JD Mart, we shall be having logistics services enabled in a couple of weeks. Businesses would have 10 to 11 logistics providers to choose from. Payment escrow services too shall be rolled out very shortly. Total active database on Just Dial stood at about 30.4 million listings, and paid campaigns at the end of the quarter were about 457,000. Now, as you all know, India is battling second wave of COVID-19 for the past 6 to 8 weeks, and the impact has been quite severe. Like rest of the country, our employees who have been impacted, and the company is taking all measures to support them in these tough times. There has been some impact on traffic and monetization. We are closely monitoring the same. And hopefully, as soon as second wave subsides, recovery should be faster this time. Third March, things look very optimistic. March month, in fact, we were at almost 90% of pre-COVID levels. JD Mart traffic also should start gathering traction in coming months as JD Mart starts featuring in Google search results for B2B search queries. As we speak, 2 million pages of JD Mart have already been indexed. In long term, I think our both JD and JD Mart platforms are likely to be key platforms for SMEs to get online, to get new customers, and also our services shall enable them to run their business efficiently via use of technology, which is what SMEs require today. With this update, we shall now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishit Paris. Please go ahead.
Sure. Thanks for the opportunity. Just 2 questions from my side. First on the quarter and then second on the B2B side, right? The paid listing addition seems a little weak despite I think the collection recovery has been pretty decent, right, for this quarter. Any reason why I think we're still seeing a lot more hesitation from SMEs? Is this largely because of, let's say some of the SMEs are out of the business? And how should we think about the churn rates in the paid listings now versus what we were at in the pre-COVID levels? So that's first. Second, could you just help us understand and update on the B2B business? While you mentioned logistics and payments will get rolled out, could you just talk a little more in detail about one, sales and marketing initiatives? What are we doing apart from IPL? And second, I think on the hiring front, what are we doing from a senior management perspective, and how's that shaping up? And is there a timeline sort of we are putting out when we can call out B2B business separately?
Okay, so firstly on the paid campaigns, so I think the way to look at paid campaigns would be to look at overall annual basis. So by and large, if you see annually, we had about 29% impact in top line. Against this particular 29%, about 14-15% drop has been due to paid campaigns, and the rest about 12-13% impact has been due to serialization. So campaigns, while this particular COVID second wave had a significant impact on SMEs, have been affected to the extent of 15%. As and when things return to normalcy, it should recover. As I mentioned during March month, so March month we were almost at about 90-92% of pre-COVID levels. So largely the key number to watch out is, in my assessment, how is overall revenue, monetization, etc. panning out. Yes, it will be partly a factor of campaigns versus realization. That will automatically fall in place. Coming to your question on churn rates, during this particular year, definitely churn rates would have inched higher because certain SMEs would have decided to possibly pause their campaign for some period and then probably come back into the paid ecosystem. One example which I keep giving is that even Just Dial as a corporate, right? So we did advertise only, our advertising spends were down 90% for the entire year. But that does not mean that we have churned out as customers for be it Google on the digital side or any mass media platform. So everyone allocates a certain budget to advertising, and those budget allocations can see fluctuations basis macro environment. On the B2B side, for IPL has resulted in great branding for the platform. Going forward, we intend to divert a part of the spend towards digital campaigns. So typically, as you would have seen with any new product launches, you typically do a mass media campaign and then you possibly get into a sustenance mode. With IPL, we understand that whenever IPL resumes, we would obviously have the option to again sign up. We would have the right of taking that inventory first. So during third quarter, we might again want to come back for this particular mass media campaign. On the monetization side, we have carved out a team internally, frontline sales executives, who will be working on B2B monetization. We have also beefed up our senior management team on the monetization front. There are people who will be wholesale dedicated towards this particular monetization initiative. As far as timelines are concerned, broadly the way we look at it is that in next few months, traffic should start inching up. In parallel, our preparation for monetization is ongoing. And I think in 2 months, both traffic and monetization should start seeing upward trend. Not to mention that this particular second wave caught all of us off guard. We had great plans on monetization in parallel with IPL. Those seem to be sort of deferred by maybe 1 or 2 months, but that's okay. The platform is being built to be the B2B place to go for the next 3 years, 5 years perspective.
So essentially you're saying we can start calling out B2B potentially starting 1Q or 2Q. Is that fair?
Yeah, so in terms of segregated numbers, etc., once next quarter starts, at that point of time, we'll take a call on the same.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Vivekanand Subaraman. Please go ahead.
Hi, thank you very much for the opportunity. Could you help us understand the split between revenue, traffic and campaign in the top 11 cities versus the rest of the markets? So that's question one. The second question is with respect to the number of campaigns. So what got impacted more? Was it the number of advertisers itself that came down, or was it the case that the number of advertisers were broadly similar to prior years, but they ran only one campaign during the year versus multiple campaigns in prior periods? If you could explain that, it would be great. Thank you.
So firstly on Tier 1 versus rest of cities. So Tier 2, Tier 3 cities today contribute, say for last quarter, about 33% to top line, and to campaigns about 54% or so. As far as traffic contribution is concerned, that is largely 50-50. 50% traffic comes from Tier 1 cities and rest from Tier 2, Tier 3. On the campaigns front, this particular quarter also we added around 2,500-3,000 campaigns. In fact, March, what happens is that during the last week of March, since there are bank holidays, etc., a part of the collection tends to get spilled over to the month of April. So about 10 crores worth of collections got spilled over to April. Had that particular collection been booked in March itself, that itself would have added probably 5,000-6,000 additional paid campaigns. So from that perspective, paid campaigns are trending in the right direction. Yes, there would be certain categories such as your hospitality, retail type of categories, which are still struggling under COVID. They could not even recover post the first wave. So those categories would have seen some impact. So as I mentioned, that campaigns, the way we look at it is that overall campaign impact year to year is about 50% itself.
Right. All right. And is it possible to give more color on the number of advertisers that are there now? Say it's fine if you give the number for FY21.
Campaigns to advertisers, that ratio largely has been in the range of 1.2, 1.22. That has not materially changed.
Right. Understood. Okay. I have more, but I'll come back.
Sure. Thank you.
Thank you. The next question is from the line of Abhilasha Satalia from the Dalal & Broacha. Please go ahead.
Yeah, thanks for taking my question. Our overall active customer base is down 15% on year-on-year basis. So how much has been the impact on B2B and B2C side? So I just want to understand that how much have we seen the impact on our B2B customer, which is typically around 1 lakh last year?
So, Abhilasha, while I have not seen the exact numbers, simply because at this point of time it's the same salesperson who goes and sells to a dentist, to a wholesaler, to a real estate agent. There is no category-wise segregation in monetization at this point of time. But my sense is that B2B drop would have been relatively lesser compared to overall, because it's the B2C services such as your restaurants, hotels, wedding-related categories, education institutes, tutorials, which have been severely impacted due to COVID. So that way, my sense is that B2B impact should have been lesser.
Okay. And you mentioned in April we have already reached 85% of pre-COVID level, right? So that was in terms of the customer this we are talking, or in terms of collection?
So fourth quarter, I mentioned that we did about 85% of pre-COVID levels. So fourth quarter, we collected say around 200 crores as per balance sheet numbers, or 210 if I were to allocate the April first week March related collection. So that was broadly 90% of our pre-COVID run rate of 235 to 40 crores per quarter.
Yeah. And we have seen further improvement in April.
In April, it is not possible to have improvement simply because the impact of second wave, as all of us know, has been much severe. So April anyway typically tends to be softer versus March, because since we run on a April to March cycle, typically we have high ticket renewals that are lumpy in March month. And April this time obviously had impact of second wave also. So we are still monitoring how April, May, this particular quarter pans out. So we'll have to see the impact as quarter ends.
Yeah. Okay. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Madhu Babu from Canara HSBC. Please go ahead.
Yeah, hi sir. So how much of the billing is on the monthly packages and how much is annual as a percentage of revenue?
So overall about 30% comes via monthly payments and the rest 70% via upfront collections.
So monthly payments would be hit in this 1Q again because of the second wave in a big way.
In fact, monthly payments are not hit that much because monthly payments anyway are recurring in nature. Those customers do understand that, okay, whatever they are paying is for a longer duration. Typically, what gets impacted is the new customer signing up, because that customer obviously has the option of saying that, oh, let me not take it right now, I'll take it a month later when I have better grip on my own business.
And second, sir, how is the pricing approach on JD Mart? I mean, are we giving any free trial, and how is the fleet on fleet again, because there's a second lockdown? So how are we approaching the SMEs to even start interacting and helping them on the catalog, etc.? So how is that progressing?
So on the fleet on fleet bit, at this point of time, almost the entire workforce is operating from home. In last 1 year, we have been able to educate our fleet on fleet to connect digitally, connect online to customers. So they might be connecting via calls, messaging, these online mediums, which is also good for us in the long run. Pre-COVID, customers did have the expectation to see someone physically face-to-face to sign up a campaign, but all of that is changing. For example, now almost about 50% plus payments or 60% payments come via digital mode versus the remaining coming via checks. So that connect with customers is happening online. Coming to your first question on JD Mart pricing, so we are working on various packages where we do plan to give 30-day or 60-day free trial to customers. At this point of time, there are two teams that are aggressively working on creating digital catalogs. So there's an in-house team as well as there are certain external vendors also helping us do the same. We already have about 35-40 million products as part of catalogs in JD Mart listing. And we already have about 400 to 500,000 rich catalogs on JD Mart platform. So today, if you go and search anything on JD Mart, even if you search for you want to buy buffaloes anywhere in India, you would be able to find them.
And sir, the review has been mixed on the Play Store. I mean, so how are we working on the app development? So obviously, these are initial days, but so how are we taking that feedback? And
so reviews from our assessment have been quite positive. So app was rated, has been rated pretty well. As you launch such a big platform, there tend to be certain teething problems, etc., which keep getting fixed from time to time. In fact, on the JD app side also, you would have seen the latest update that went live a couple of weeks back, both for Android as well as iOS. So both these particular apps overall are getting good rating, good traction overall. Anyone who has used this particular platform, even spent 5 minutes on the platform, be it apps or be it mobile sites, websites, they have come out genuinely impressed.
And the last one, because the IPL has been stalled, so how the ad spend will go? I mean, because last year we planned a big ad spend for JD Mart coinciding with IPL. So now how the payments will span out? Thanks.
So IPL, the contractual arrangement was based on that we would be billed for whatever inventory gets played. So IPL ran for 29 out of 60 matches. So almost 45-48% of overall deal value will get billed. So that is how it is.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Varun Goenka from Nippon India Asset Management. Please go ahead.
Yes, Abhishek. Good evening. Thanks for the opportunity. Just two quick clarifications. One, would we continue to do our annual buybacks, or what is the plan as such?
The last buyback was concluded in August 20. So as I mentioned in my opening remarks, the operating cash flows and treasury gains were sufficient to even fund the entire payout for buyback. The next decision for buyback earliest for the proposal can be earliest taken up in August 21. So at that point of time, we'll have discussion with the board how we want to go about our capital allocation strategy. The board and all the stakeholders obviously are very clear that they would want us to pursue organic growth related initiatives. But we do have sufficient cash flows to do even both. So at that particular point of time, we'll take appropriate decision.
Sure. And secondly, in terms of our product capabilities, I mean, it's an awesome product that you guys have created and the full stack. If you could help us see over the next maybe 1 or 2 years, what are the white spaces that you're looking to fill? What capabilities additionally that you're building? Or how are you completing the loop in terms of customer fulfillment or onboarding? Anything that logistics or finances side.
Okay,
really help.
Okay, so the way this particular platform is being built is with the basic philosophy that, 5 years down the line, we want it to be sort of equivalent of Alibaba in India. What I mean by that is that this particular platform should have two streams of revenue. One is subscription revenues, other should be transaction-linked revenues. Today, SMEs do not look at a platform just as an advertising medium. Yes, advertising is at the core, but they also want tools and other things that the platform can provide to help them run their business efficiently. Which is why we are incorporating certain additional features such as logistics services, where any SME, as soon as they enter their shipment details, they will have 10 to 12 different logistics service providers to choose from. Similarly, there will be payment escrow services as well. In logistics, transit insurance will be bundled for all the shipments that will take place. At the same time, we are working on integrating financing and insurance related options as well. So any SME wanting to avail fire insurance, any natural calamity insurance, or any other insurance for their business or for even individuals themselves or their family members, etc. All those features we intend to have. And same on the financing side as well. On financing, many lending players want that particular rich information that we have in terms of how long has this particular SME been in business, is the SME GST registered or not, what is their payment schedule to Just Dial, which they can use as a proxy to gauge how much, whether to lend working capital loan to the concerned person or not. So all these features will ideally result in SMEs being very sticky with this particular platform. There will be some SMEs wanting to go for subscription plans. There will be certain SMEs wanting to pay a certain percentage of commissions on the transactions that will happen. So platform will cater to all types of SMEs.
Sure, great. And just to reverse the same question, what do you think will be beyond your purview, what is probably important for the customer, but it could be beyond your core or beyond your capability?
So there, I think that in all these additional services at this point of time, what we are thinking is that we would primarily be enablers. We believe there are specialists out there who have expertise in rendering each of these services. Our expertise should come in terms of aggregating all of them in one place and providing our intelligence via data, analytics, etc. There could be cases where we might realize that we need to possibly get into operations of some of these services. I'm not saying that we will definitely need to, but that is one area we'll need to closely watch out for, that the service providers with whom we are integrating should be able to give a great user experience to SMEs booking those shipments on the platform.
Sure. Thanks. I'll come back in the queue for more questions.
Thank you.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is regarding the traffic. If I look at quarter on quarter, there is a slight dip in traffic. Can you talk about how the traffic, what is the reason for that? Because we were seeing the overall activity of the people in general increasing on a quarter on quarter basis. So what led to dip in traffic? Second question is, how should we look at the advertisement expenditure for Q4FY21? Because there will be some IPL related cost, and as you said that 45-50% of that will come in. So how much will be the SGent? That tend to be like that number used to be 35-40 crore rupees a quarter. How that will trend? These are my two questions.
Pranav, firstly on the traffic, traffic largely was flattish quarter on quarter. We also have to understand that last quarter had 2 lesser calendar days versus previous quarter. So the 2.5% sequential drop that we are seeing is primarily due to those particular lesser days itself. So by and large, traffic was flattish. And as I mentioned that there wasn't much of advertising that happened in this particular quarter. This number, again, the way to see would be that this organic traffic that we are getting is already about 7-8% higher versus pre-COVID levels. Whatever impact on a year-on-year basis that we are seeing is primarily due to paid traffic, where we have virtually spent nothing in the entire course of the year. As and when those particular digital spends come back, as and when popularity of the platform increases due to other mass media campaigns, traffic should start moving upwards. Plus from end of March, there was this particular little impact of second wave that had started coming in, though I would say that did not impact the numbers. Coming to ad spend, so first quarter, yes, IPL related spends would get expensed. So largely they should be in the range of 48 to 50 crores or so. This includes all types of advertising spend, including content creation and other related spend. For the entire year, as we had mentioned earlier, that we are planning to almost have double of spend of FY20. FY20 we spent about 65 crores. So 130 crores we have allocated, but we would obviously be judicious enough to see how to allocate this. We have done a mass media campaign. The next step would be focusing on paid traffic plus SEO, Google organic traffic related initiatives. Then as we reach third and fourth quarters, the mass media campaigns could again come back.
If I just had to, get a little more detail, so you spent some money on IPL. I mean, where we can start, seeing its impact? Will it be more on the JD Mart app download or traffic for JD Mart or just dial traffic? Where do you think it will start showing up?
So this particular campaign was focused on popularizing JD Mart. So this would obviously have impact on JD Mart app downloads itself. So just to give some brief color, pre-campaign we had only about 1,500 odd downloads that were happening. During the campaign it touched as high as 20,000, as high as 30,000 a day also on certain days. And the way we evaluate it is that my salesperson, whenever they were interacting with any SME pre-IPL, every SME was saying, okay, what is this JD Mart that you are referring to? Today, whenever my salesperson talks, that the response in 95% of the cases is, yeah, we saw that particular JD Mart campaign with Ranveer on IPL. So that obviously it's not just about evaluating how much delta it created immediately in terms of app downloads, traffic, etc. We would be able to leverage this over next several quarters or even years, so to say.
Okay, great. One more question, if I may. How serious is this lockdown? I mean, currently, what are the trends we are seeing in terms of the traffic and the collections? I mean, if you want, you may just benchmark it to what we saw in Q1FY20 maybe. Q1FY20, I'm sorry.
So Q1FY21, immediate impact on traffic was quite severe. There was about 50-55% immediate drop in April last year. This year, traffic has reasonably held up well, so there has been only about 10% impact on traffic. Monetization, again, April was quite severe. This year, there has been probably about, say, around 35-40% impact versus, say, March quarter in this particular period. Situation is still evolving. Good thing is certain tier 1 cities are coming out of this second wave impact, though restrictions are yet to be lifted. So I think if these particular cases remain low for few more weeks, then recovery should also be faster. My sense is that first wave had a much serious immediate dent and it took longer for recovery to take place. This year, as far as traffic etc. is concerned, the impact is muted. There is an impact on monetization, but as and when the second wave subsides, monetization should come back with a bang, which is what we were witnessing from second half of March onwards. March this year seemed to be a very sort of normal March for us, where we were able to do 90-92% of pre-COVID levels. Does that answer?
Yeah, that answers my questions. Thank you so much, and all the very best.
Yes, you are audible. Please go ahead.
Okay.
Thank you. The next question is from the line of Pratik Agrawal from ASK Investment Managers. Please go ahead.
Yeah. Hi. You talked about adding, for example, logistics as a part of JD Mart and financing and all of that, insurance. Now, will those be charged services? You will make something there, or it will be, add-on services to increase the value proposition? And similarly, there are other things that one can do, book restaurants, book airlines, railways, etc. Is that part of the business seeing any significant revenues?
Okay, can I take this question? I would like to give you a picture about JD Mart. I was trying to speak in the earlier. I had to redial again. I'm sorry, my name is Mani. I'm also part of the team.
Hi, Mani.
Hi. So, JD Mart, the sole purpose is to be the B2B marketplace of India.
Yeah.
So, whatever it takes, we're going to achieve it. You've seen our product. It's been well appreciated. There's a big thumbs up from both the vendor community and the user community. JD Mart campaign also took off very well. The awareness about the product has reached. Now, the second level campaign from the company is inviting every B2B business to download the JD Mart app, and they get a free catalog as well as free customer leads. They don't have to pay for the leads. They will get free customer leads. So whatever they may be paying a competition to be part of, they can just by downloading the app and uploading the catalog, they would get free leads. Till there is a paid ecosystem takes over, obviously the paid people will get preference. So there is going to be an aggressive promotion. As you know, B2B means a business buying from another business, which means in both the cases, we would want both the parties to download the app. Preferably, we would want the traffic to come directly through our own app. To make it more attractive, we are launching this scheme of download the app, activate your catalog, get an advertising worth probably 20,000-30,000 rupees for free. Okay? So this is why. Now, to make JD Mart to be even more successful, like the likes of Alibaba and all, you kind of plug in payment, escrow payment services, plus logistics, the best practice logistics into it, and give it as a complete solution. So as we move forward, you will see, though many businesses may source things via JD Mart, they may want to pay through JD Mart because you're dealing with another party who's not known. So basically, you want to secure. So if you pay, you want to be sure that you get your goods and services. Similarly, the selling party may want to dispatch only if you're sure about the payment. So we play as a very active role, and we see this as a tremendous scope in the future. Logistic service, without a logistic plugin, it will be incomplete, any marketplace, And interestingly, B2B marketplaces are also going with complete logistic solution. That is a need of the hour. Now, I was wanting to touch about, the general mood of enterprise. It just picked up in Feb last 2 weeks to March. It really picked up. Things seemed to be normal. Everything was going on the right track. And then they were hit with the second wave, which was far more severe, which generally dampened the mood of business community as such. Just to explain a bit about the drop in revenue, which is 25% year on year. Just as revenue largely come from non-B2B services, and among non-B2B also, majority, 80% of it comes from services actually. Okay, we get most of our revenues from B2B businesses, B2C businesses, and 80% of those are services. Most of these services are people go to the setups and get availed, or the services come to your doorstep and do it. Both these cases were very badly affected by the lockdown. The severity of these kind of, for example, nobody is going to a dental clinic to get a dental job done in the last 16 months, probably 14 months, but just out of fear of COVID. Similarly, people were dreading to invite a pest control guy or a AC repair guy home. So these were the change in scenario. The moment things pick up to normal, you will see Just Dial's revenue should bounce back with a lot of, far more aggressively as compared to what has been in the past. Okay, so lockdown definitely plays a very big impact on the type of revenue that we monetize. There it will definitely play an impact. So once we conquer over this second COVID wave, and I hope there is no third COVID wave, then things should bounce back to normal. We may even do better than pre-COVID numbers. Okay, so it's always like Abhishek said, it's the mood. If the mood is not good, you don't want to spend on promotions and advertising. We wanted to advertise in IPL for JD Mart because that was a one-time launch campaign. That was an awareness creation campaign. So we did it, and we got good visibility and good branding. Unfortunately, IPL had to be canceled midway, and we got our refunds also from the the channels where we had spent it. Now, your question regarding JD Mart as a product or any of the new products that Just Dial will launch, yes, our goal will be to provide the best of the best services and make it the world-class product such that, we are there making a meaningful, not a Me Too kind of a service out there,
Sure, understood. The other question was on the other services that you have, bookings of various things, airlines, buses, trains, etc. What is the outlook there?
In fact, interesting. As we speak, we are launching aggressive download of JD Mart and Just Dial app with two-pronged strategy. For JD Mart, as I said, it will be like download the app, get a free catalog, and free customer leads. That's the strategy for JD Mart. So we are hoping, millions of Indian businesses who download the app and avail the free ad campaign and free leads. Who doesn't want free customer leads? For the B2C, which is Just Dial app, first time ever we are launching. Hopefully in the next 2 to 3 weeks, we would have launched Just Dial. Download the app and avail JD Cash. So the JD Cash is like a virtual cash. You can burn it against transacting online on JD, which will include flight tickets, bus tickets, train tickets, and all those online digital whatever solutions we provide. You can burn it there. And soon when the lockdown gets over, you will be able to burn this JD Cash also on restaurants, spas, and various other establishments. Now, in order to earn JD Cash, you have to download the JD app. And as you download the app, you get some JD Cash. And if you refer more friends and family to download JD app, for every successful download, you get more JD Cash. And in the process, you can accumulate a lot of JD Cash, and which you can spend online on Just Dial or offline with Just Dial vendors. And basically, it's equivalent to cash, And this is what we are working on. And this should give a lot more. Important is to, of course, create the awareness and have people to come and transact online. As you know, that we want to get on to an online transactable engine as much as possible going forward. So these kind of instruments would help us.
Sure, thanks.
Thank you. The next question is from the line of Rishi Parikh. Please go ahead.
Hi, thank you for this. Just 2 questions from my side, right? One on traffic. I think, Abhishek, you mentioned about the app downloads, right? But if you could just provide a little more color on how is the traffic in April, May, when the IPL was on. That's one. And essentially, I think, Mani, like you mentioned, right, that, from a supplier side, I think you've got enough incentive for them to download the app, get a free catalog and lead, etc., right? But how do we sort of attract the buyers to be on the platform? Because that's like the network effect that we could potentially create, right? That's one. And second, just on marketing spend, what is the outlook? Could you just provide a color excluding the IPL spends, one? And what level of cash are we planning to spend with the JD Cash initiative that you just talked about? Thank you.
See, on the traffic, April, May, our traffic was just about, as I mentioned, 8-10% down versus pre-second wave. Now, April, May had multiple factors. On one hand, we had IPL running with an aggressive IPL campaign. On the other hand, we had the second wave also. So very difficult to differentiate that. Had IPL campaign not been running, could the drop have been higher or how? On advertising spend, as I mentioned, that we have allocated say around 120-130 crores for the full year. Whatever we plan to do for JD Cash, partly it will be funded via margins that we anyway earn in those particular verticals. And the rest would be from the marketing budget, advertising budget that we have carved out for the entire year. So that is how it is.
What is the level of budget, if you can just provide an absolute number?
120 to 130 crores for the full year.
And that largely be the IPL expenditure, no?
No, so IPL expenditure at this point of time is ballpark in the range of, as I mentioned, 48-50 crores. So we do have remaining about 60 to 70 crores for the year left. we could choose to run another mass media campaign. It could be IPL or any other property, as and when IPL resumes in the third quarter. The rest of the budget could get diverted towards digital spends, etc. So at the beginning of the year, we had the plan to do primarily spend on IPL for mass media. But now that we have higher budgets for the rest of the year, that can get utilized for various other revenues.
I think we had also clearly mentioned that one-off launch campaign will be there for JD Mart, which shouldn't be counted as part of our advertising on a regular basis. So as soon as things get to normalcy, we may have to get our regular advertising up and running. And this one-off campaign, which has been done for JD Mart, that should be not counted as part of the regular ad campaign. And as far as JD Cash is concerned, it's neutral, cash neutral exercise, because it's either you share from what you earn, or businesses honor your JD Cash because they're getting an advantage of the new customer.
Okay, so the bulk of the hit will be on businesses, right?
Yes.
Okay. Understood. So we're giving them leads, and that's what gives them this. Okay.
Yeah.
Understood. And just a clarification on this. So this is X of IPL that you're talking about, the marketing spend, right? So if let's say tomorrow 3Q, if IPL spend come back about 50-60 crores additional, which is left, we'll still be spending the regular marketing budgets that we typically talked about.
Yes. Last year we didn't spend anything on advertising, so a year before you can take as a benchmark, and you could probably add 20% to it, which would additional 20% of that, in terms of spend.
Okay. So another 100 crores.
Right now, the focus is a lot to get app downloads and through some kind of incentive mechanism. Let's see how it works. Hopefully it works well, and this should give us this. The interesting thing is you have to get direct traffic as much as possible, and obviously you have to continue your SEO and SEM and other stuff also. And regular TVC and all that.
Okay, got it. Perfect. Thank you.
Thank you. The next question is from the line of Keshav Lahoti from Antique Stock Broking. Please go ahead.
Hi. Thank you for the opportunity. So can you give some broad color about JD Mart? What will be your monetization plan? What sort of revenue you are planning from this, let's say, in the medium perspective in next 3 years? And how you are going to, price it compared to your competitors?
Okay. So the way you approach this is first to make an impact in terms of product, in terms of comprehensiveness. So hence you would want to have everybody's catalog out there before you even think of an aggressive monetization. There are people who are really wanting leads, and they are the ones who are coming out there and signing up on their own. As you know, that we used to get 20% of our revenues from B2B. But a good platform will probably help us monetize better in the long run. But in the short run, it's better to sacrifice a bit of revenue and go all out aggressive in building a great content, and kind of make a difference in terms of product out there in the marketplace. So that's going to be our sole focus in terms of pushing this product across to B2B businesses, and whatever happens should be an outcome of this activity in terms of, so revenue should be an outcome. In the next 6 months, we should push JD Mart as the go-to place for all B2B businesses, including brand manufacturers, or whether it's a small-time manufacturer or any type of wholesaler, dealer, industrial product guys, all those kind of things to do with B2B should be part of this.
Okay, got it. Just one more question from my side. This quarter, the other income was kind of, half compared to year